I'm going to show you how to buy the best index funds on the market from start to finish. Before we get started, let's talk a little bit about what we've discussed so far. There are two really good choices for index funds that you can invest in. One is the total US stock market index fund, and the other is the world index fund. You'd pick the total US stock market index fund if you want a lot of diversification and you just want to invest in domestic United States companies. And you would pick the world stock index fund if you want international exposure. You can pick either one and there's no wrong choice. Now that you know which index funds are the best, how do you actually invest in those index funds? Let's first talk about the World Index Fund. This is an easy one because there's only one company that offers the World Index Fund, and that company is Vanguard. Vanguard calls its World Index Fund the Vanguard Total World Stock Index Fund Admiral Shares. And this index fund is indicated by a ticker symbol of VTWAX. You'll need this ticker symbol in order to place a trade. It's kind of like a stock symbol. So for example, you've seen that Microsoft has a ticker symbol of MSFT, or Apple has a ticker symbol of AAPL. So for Vanguard's Total World Stock Index Fund, the ticker symbol is VTWAX. This Vanguard Index Fund has an expense ratio of 0.10. If you remember from my previous video, it's a good idea to have an expense ratio that is 0.20 or below. So this index fund is great because the expense ratio is half of that. The expense ratio indicates how much fees you'll pay to hold this index fund over a year. So the higher this expense ratio number, the more fees you'll pay. That's why you want this expense ratio number to be as low as possible. This index fund has an investment minimum of $3,000. That means the very first time you purchase this index fund, you have to invest at least $3,000. For additional investments though, you only need to invest $1 or more. Another nice feature of this index fund is that you can set it up for automatic investments. So if you want to automatically invest into this index fund every month or every few months or every week, you can set that up on the Vanguard website. Note that in order to buy this index fund, you'll have to have a Vanguard account, and you can only buy it through Vanguard. You can technically buy it through other websites like Charles Schwab or Fidelity, but you have to pay a pretty high fee in order to purchase this Vanguard fund. But if you have a Vanguard account, there is no commission to buy this index fund. So each time you buy, you don't have to pay any kind of transaction fees. On this screen, you'll also see in tiny letters this little line that says, also available as an ETF starting at the price of 1 share. So this index fund is offered as another product called an exchange traded fund. For all intents and purposes, these two products are extremely similar and they track the same index. The ETF has a name of Vanguard Total World Stock ETF and its ticker symbol is VT. This ETF has an expense ratio of 0.07. which is slightly lower than the expense ratio of the index fund. Also, you'll note that this exchange traded fund can be purchased for $100 per share, and that's the minimum you need to buy, 1 share. However, unlike the index fund counterpart, the exchange traded fund does not have automatic investments. But on the other hand, the exchange traded fund can be bought through most brokerages. So you can buy this ETF not only at Vanguard, but also at Charles Schwab, at Fidelity, and they won't charge you any extra commissions in order to make the trade. All right, now the question comes down to, should you buy the index fund or should you buy the ETF? Get ready for the ultimate showdown. Index fund versus the ETF. When we just compare them side by side, it looks like there's a clear winner, the ETF. It's got lower yearly fees, lower minimum investment, and you can buy it through most brokerages. But what about automatic investment? That's where the index fund shines. And that is the index fund's superpower. When you set up automatic investments, you're turning investing into a good habit. So your money will be invested on a periodic basis into the market for the long term. And since you're investing money every month, that money will grow exponentially. Another benefit of automatic investing is that you are less likely to react to the market ups and downs because you know that you're putting in money, for example, on a monthly basis. So yeah, the market might go down, but you will also be investing when the market's going up. So when should you buy VTWAX, which is the index fund, versus VT, which is the ETF? If you have the minimum investment needed for the index fund, which is $3,000, you should just invest in the index fund because you can take advantage of that superpower that I talked about, automatic investing. But I know that not everyone has $3,000 just lying around. So if you have a lot less than $3,000, it's better to get started with investing using the ETF, which has a much lower minimum. Now you might say, but Anand, come on, VT has lower fees per year. Isn't that a big advantage? Yeah, it's a little bit of an advantage, but there's one other trick I haven't told you about. You can actually call up Vanguard and tell them to convert VTWAX into VT. So not only can you take advantage of automatic investing, you can also take advantage of the lower fees by just calling them up and converting it to the ETF. Now that you know how to invest in the world stock market through an index fund or an ETF, let's turn to the domestic US stock market. For the domestic side, you have a lot more choices. But before you freak out when you're looking at this eye chart that I just threw up, you'll notice that there are 2 index funds with no minimum purchase requirements. And in addition to that, you'll also notice that the expenses of the index funds compared to the ETFs are very similar. So right off the bat, you can scratch off all of the ETFs because they don't offer any advantage over the index funds. And plus, they don't have automatic investing, which all of the index funds have. Now you're left with 3 options to choose from. You can either purchase the index fund from Vanguard, from Charles Schwab, or Fidelity. My top pick here is actually Vanguard. Even though there's a $3,000 minimum to invest in the index fund and the yearly fees is slightly higher than Charles Schwab or Fidelity, you'll remember from the previous discussion that Vanguard is the only choice when it comes to the world index fund. So if you ever changed your mind in the future and figured, you know what, I would also like to get some international exposure, then if you opened up a Vanguard account, you have the option to purchase either one, the domestic US stock index fund or the world index fund. And you can do both in a Vanguard account. But if you don't have that $3,000 minimum, you can pick either Charles Schwab or Fidelity because both of those index funds do not have a minimum purchase requirement and their expenses are quite low. Now that you know which index fund or ETF you're going to buy, what are the next steps? How do you actually make the purchase? So step 1, you actually need a brokerage account. So an account with Vanguard or Charles Schwab or Fidelity or any other brokerage company. And then step 2, you actually have to make the purchase by making a trade within that account. And then there's a little step 2.5, which is your superpower, that is setting up automatic investments. In order to open up a brokerage account, I've created a separate video that you can take a look at on how to open up a Vanguard account, and it's a step-by-step guide. So I've linked that in the description box below. Please take a look at that and then come back to this video. Now that you have a brokerage account set up, let's dive into the details of how you'll actually purchase an index fund or an ETF, and also how you'll set up automatic investments. First, I'll show you how to buy an index fund. To get started, you'll go to the Vanguard homepage and then enter your username and password and log in. Once you're logged into your dashboard, you'll go to the menu bar on top, click on Transact, and then Buy and Sell. On the next screen, the easiest way to buy an index fund is to just go into the search bar and type in the ticker symbol of the index fund. So here, I've typed in VTWAX, which is the ticker symbol for the Vanguard Total World Index Fund. And then you will hit the Get Quote button. As soon as you do that, you'll see a pop-up with the index fund's details. Here, hit the Buy button. On the next screen, you'll enter a bunch of details to make your purchase. First, if you have multiple accounts at Vanguard, you can go to this drop-down and pick the account where you want to make the trade. This will already be populated for you, but just double check that the index fund you're trying to purchase is in fact the index fund that's being shown on the screen. You'll see that there's a minimum investment for this index fund. Specifically for this one, it's $3,000. You'll also enter your purchase amount. Once you have the purchase amount in there, hit the Continue button. On the next screen, you'll indicate how you're going to pay for the order. If you already have money in Vanguard, that'll be stored in something called a settlement fund. So if there's money already there, you can pick the settlement fund option and buy your index fund that way. Or at the point you need to buy the index fund, you can transfer that amount from your banking account. If you have multiple bank accounts stored at Vanguard, you would use this drop down to pick which bank you want to fund the purchase from. And then you'll hit preview order. On this screen, you'll review all of the details of your order. After that, you'll hit the submit order button. Once you submit the order, the trade will get executed at the end of the trading day. This is one of the features of an index fund. It does not trade during the day or throughout the day. All orders get executed at the end of the business day. Next, we'll take a look at how to set up automatic investments. That's the superpower that I talked about. On your dashboard, you'll click on the automatic investments button. That'll take you to the automatic transactions screen. Here, hit the add automatic transaction button. Now you'll add all of the details for the automatic transaction. First and foremost, you'll pick whether you want the money to come from your settlement fund or your bank account, and then you'll pick the bank account where you want the money to come from, the frequency of when you want the automatic transaction to take place. So what I normally do is I just set this up every month. I get a paycheck every month and I set aside this money to pay myself back. You will also indicate when you want the automatic transactions to begin. So you'll pick that date. Next, you'll indicate when you want this automatic investments to stop. I actually don't have a specific date that I put in there. I just say until I stop this plan. That way I can dictate when I want the automatic investments to stop. And usually I just don't even think about it. It just goes out of my account every month, and it's a good habit that I set up. Next, you'll indicate how much you want to invest every month. In this example, I've picked 50 bucks. And then you can indicate how you want to allocate your investment. So you can specify something like, here's the amount of dollars I want to buy of a particular index fund. And finally, you'll indicate the actual index fund where you want the money to go to. So in this example, I'd like to put $50 every month in the total stock market index fund. Then you'll scroll down to the bottom of the screen and hit the continue button. Next, you'll review all of the details and make sure that's correct. So make sure you check your frequency, when the automatic investments are going to start, how long you want the automatic investments to take place, and how much you'd like to invest. Also check the banking information to make sure the money is coming from the right bank account. And then you'll see this nice little nifty summary called estimated annual investment amounts. This is kind of cool because you get to see how much money you'll actually invest every year. So if I set this up right now, I'll invest $250 for the whole year of 2023 because we're in the middle of the year. And then in 2024, I'll invest $600. It's cool to see how much this money accumulates on a year-to-year basis. And then hit the submit button. Now that you know how to set up automatic investments, let's take a look at how you'll purchase exchange traded funds, or ETFs. Again, you'll go back to your dashboard, go to transact, and then hit buy and sell. The next step is going to be very similar to how you purchased an index fund. Just type in the ticker symbol of the ETF that you want to buy, and then hit the get quote button. As soon as you do that, you'll see a pop-up. Here, hit the buy button. Next, you'll enter a whole bunch of details. You'll indicate which account from your Vanguard account you want to use. You'll notice that the transaction's already set to buy because you want to purchase ETFs. Double check the symbol and then enter an amount of either shares or dollars. So if you put in 100 shares of VT, you'll purchase individual shares times 100. Or you can indicate a dollar amount. So you can say, I want to invest $10,000. Vanguard, you tell me how many shares that is. When you indicate a dollar amount though, you can end up with fractional shares because that entire amount is going to be divided by the share price, and then Vanguard will calculate how many shares that is. Next, you'll pick the order type. Although there are different order types, for this example, to keep things simple, we're going to pick market. A market order type means that the trade will execute immediately if the trading day is open. In other words, if the stock market is open. If the stock market is not open, the trade will execute as soon as the stock market opens the next day. When you click market, the duration will automatically be set to day, meaning that the trade is going to execute immediately. And then on the middle part of the screen, you will have a lot of details about the ETF itself, the name of the ETF, what is the trading price, etc. On the bottom right-hand side of the screen, you'll notice the trade details. Whenever you're trading ETFs, that commission should always say free. And then double check the shares, and you'll also see an estimated amount of how much you're going to pay to make this trade. It's estimated because the trade will execute as soon as you hit the submit button, and the price can fluctuate up or down a little bit in that brief time. Next, hit the preview order button. On this next screen, double check and make sure all of the details are correct, and then hit the submit order. Congratulations, you are now ready to buy an index fund or an ETF on your own. If you're new to the world of investing, I would love for you to look at this video in detail and then actually take the steps yourself. Go ahead and try to purchase a small amount of an ETF or an index fund to familiarize yourself to the investing process. And once you do that, you'll just get more comfortable with it, and you'll be able to set up your portfolio for the long term for your future. And if you successfully make a trade or set up automatic investments after watching this video, it would really make my day if you could just leave that in the comment section below. I always read through all of your comments. If you can please do that, I'd really appreciate it. Okay, that's it for this video, but I have a lot of interesting content coming up, including things like how to reduce the risk of your stock portfolio, how to avoid taxes by investing in retirement accounts, and how much money you should invest in the stock market. Well, stay tuned, and please hit the subscribe button and come back. In the meantime, you'll see a couple of links pop up to my previous videos on investing fundamentals. If you haven't already seen them, please click on that and take a look. All right, bye everyone.